Hello options traders, welcome back everyone, and I hope everybody had a great weekend. So I thought to kick off the new trading week, we would start with another technical indicator here, the Money Flow Index, or MFI. The reason I chose this one for this week is that most recently I talked about the VWAP, or the Volume Weighted Average Price, and not too much before that I talked about RSI, or the Relative Strength Index. And you're going to find out that the Money Flow Index is really a hybrid of those two. So if you understand VWAP and you understand RSI, you're going to instantly understand Money Flow Index. However, there's a little subtle change with this, and it's the main reason I would use Money Flow over RSI. So for anybody who likes RSI, you certainly want to check out Money Flow Index. So let's take a closer look at this technical indicator. Money Flow Index was developed by Gene Kwong and Avram Sudak. I'm probably completely butchering those names, and I apologize if I am, but those are the two people who developed it, and it is simply nothing more than a volume-weighted RSI. So as I just mentioned, if you take the RSI, but you weight it according to volume, as we did with the VWAP, you've got Money Flow Index. And like the RSI, it is a momentum oscillator that measures the speed and change of price movements, but it's also just accounting for the volume. It also uses a 14-period range as its default. We can always change that. Keep in mind that by period, I just mean that is the time frame of your charts. Whether you're talking about a 1-minute candle or a 1-day or a 1-month candle, whatever that time frame is, we look back 14 periods. The formula probably looks familiar, and it should. It's exactly the same as RSI. Just kind of change some of the variables in here. So the MFI, the Money Flow Index, equals 100 minus 100 divided by 1 plus this other variable down here, the MF ratio, or the money flow ratio. And that is defined as the average gain divided by the average loss. Once again, identical to RSI, it's just that we're going to make these calculations a little bit differently to also account for volume. Money Flow Index, like a lot of these oscillators, is a bounded index, and that just simply means that it has a range. And in this case, the indicator must fall somewhere between 0 and 100. Ranges of 20 and 80 are usually used to denote oversold and overbought levels. These are a little different from the 30-70 levels used for RSI, although as I showed in the E-Trade platform, it does default to 20 and 80 for RSI. So like a lot of these indicators, it is a matter of preference. Sometimes people like to use tighter ranges. Some people like to expand them out. But the point I'm trying to make here is that the originators chose 30 and 70 for RSI, and they chose 20 and 80 for MFI, or Money Flow Index. So what's the benefit of the Money Flow Index over RSI? Well, the big one is volume. And most of you know that volume leads price. In other words, if you see that a stock is having a really big up day, or a really big down day for that matter, you can be sure that there's a lot of volume behind that. It takes a lot of traders jumping in to buy or sell to move the price. It's not the reverse. We don't see a big price and say, hey, because the price is up, everybody decided to jump in and buy. So the volume is what pushes prices up and pushes prices down. And because we're accounting for volume, it gives us a little added layer of security with where prices may be heading. So once again, RSI is a momentum oscillator that leads prices, but when we use MFI, we're adding volume so that can actually increase the lead time. So how do we read the Money Flow Index? Well, as you probably guessed, very much like the RSI. We can first look at overbought and oversold levels, whether we're above or below these 80-20 ranges. So when MFI is above 80, we read that as overbought. Keep in mind, just like it is for RSI, that does not mean you should necessarily be bearish. It actually could be a sign of strength. Highs can go higher, but we would at least say we're looking relatively high, and that's what we mean by an overbought condition. On the other hand, if you see an MFI reading below 20, or even for RSI for that matter, we would read that as oversold. That doesn't mean you're necessarily bullish. Why? Lows can go lower. But if you see it below 20, we would definitely say that we are in the oversold territory. It might foreshadow a turning, but we don't want to necessarily say that that is the point where it will turn. Second, we can look at crossings. I talked about this in RSI. Whenever we see the indicator move from below 20 to above, we would say, okay, that becomes now a bullish signal. Or if it moves from above 80 down below, it's when it crosses these overbought and oversold levels that it actually triggers a bullish or bearish sentiment. And then finally, we can look for divergences. And that's where we might see, for example, the stock making a higher high, but your MFI reading, or your RSI for that matter, making a lower high. It's not quite keeping up or matching. And that again might foreshadow that we're about to see a reversal. Let's now take a look at an actual example in an Excel spreadsheet. All right, what you're looking at here is an Excel spreadsheet with actual data from Apple Computer over the last 3 months. I chose that because it's the same example that I used with RSI. However, notice that with the MFI, I need the high, low, and the close. When we looked at RSI, we only needed the closing prices. But now I need all 3 of these. In addition, we also need volume. We did not need that for RSI. So we need different data points to come up with our MFI calculations. So here's the way that it will work. Instead of coming up with just the closing price, I'm going to take the high, low, and the close. I'm going to add them up and divide by 3. And that's what they call the typical price, which is just an average. And we come up with 169.69. I'm going to take that number and multiply it by the volume. To keep things small, I've actually divided the volumes in this calculation by 10,000. Otherwise, you end up with really big numbers over here, so it just makes it easier to read. So it's just this number right here times that number divided by 10,000. And that gives us our P times V. And I just repeat that all the way down for each day. High, low, close divided by 3 gives you a typical price. Multiply it by the volume. That gives you that number. Then what I'm going to do is I'm going to record the gains and the losses exactly like I did with RSI. So for instance, my first point right here, we went from 169.69 to 171. That is a gain. Prices went up. That's all I need to see to understand that it's a gain. So I take this P times V number and I record it as a gain. The next day, the stock went from 171 to 172.93. That's also a gain. So my P times V number gets recorded as a gain. Next day, we went from 172.93 to 172.69. That's a decrease or a loss. So my P times V number gets recorded in the losses column over here. So just like with RSI, we're either recording a gain or a loss depending on whether the stock price went up or down for that day. So once I have 14 days worth of data, that's what's in this box right here, I'm simply going to take the sum of the gains, that's what this box is right here, I'm going to add up all of those numbers right there, and that gives me this number right here. I'm going to do the same thing for the sum of the losses right here. I'm going to add up all of these numbers right there, and that gives me the sum of the losses. Now we're going to start getting into the money flow calculations. The money flow ratio, that's this one right here in red, is simply the sum of the gains divided by the sum of the losses. And you can see 0.9971 getting pretty close to 1. If we run this number through that big formula that we saw, we would get a money flow index of 49.93 or almost 50. Now, as I mentioned in the RSI video, it's much easier if you look at this as odds ratios and implied probabilities rather than running it through that formula. So just to make it simple, let's say you can see the sum of the gains is about equal to the sum of the losses. So if the ratios were the same, let's just say 1 and 1, could be 100,000, 100,000, it wouldn't matter. As long as the numbers are the same, I can look at this as 1 divided by the sum of these, or 2. And that's going to give me exactly 50. If I had 3 times as many gains as losses, then I have 3 divided by the sum of 4, or 75, and I'd get an MFI of 75. If we had 4 times as many gains, I'd have 4 divided by 5, or 80%. So to see how that works, let's pull up the formula. If we go back to our formula here, if I have 4 out of 5 was a ratio of 4 to 1. So we would say the ratio was 4. We add 1 to it, that gives me 5. I divide that into 100, that gives me 20. I subtract that from 100, it gives me 80. Exactly what we came up with, just a lot simpler to do so in your head. So there we go, there's the 80. So I'm going to reset these numbers there. So that's how we got this first MFI number here. How do I get the next one? Exactly the same way. I'm just going to slide this box down by 1 day. I'm now going to look at the next group of 14 days. And I'm going to do exactly the same thing. Some of the gains, some of the losses, divide them out. I get a MF ratio 0.74. I run it through my formula. Or I could also say this first number divided by the sum of these two, and I'm going to get 42.56. So if we come down to the bottom here, we go through this for 3 months, we see that we get a value, most recent value of 3410. Now this is on July 5th. Today is actually July 6th. So I don't have today's data in because the market is still open, but that would be our most recent reading for the money flow index. Let's pull up the E-Trade platform and see how it compares. So here we are in E-Trade, and let's go ahead and put the money flow index on. Choose from this studies menu up here. And these are the most often viewed, your top studies. So if you're not seeing MFI in here, you'll need to choose all studies. And from this list, here's the M's, and right up here on top is money flow index. Choose that. Default period is 14, as I talked about. The resulting line, my money flow index, the default is black. I can change it to a different color. The zones, the 80-20, these are the defaults. If I don't want to show the zones, I uncheck that box there. If I do want to show the zones, I'll keep it checked. Let's go ahead and change the colors here. I'm going to make this green for the overbought levels, and let's make the oversold red. Choose Save. And down below, we get our money flow index. Now this is a lower study. Remember, I've talked about that before. Things like VWAP and Bollinger Bands actually overlay on your upper price chart. Those are upper studies. This is a lower study. And the black line right here is our money flow index. You can see this little faint green line right there. Let me highlight it for you. That's our overbought level, lines up right here at 80. And this red line down here lines up at 20. That's our oversold level. So if you remember from the Excel spreadsheet, we came up with a little over 34 for an MFI. Right now we're at 43.23. Why the difference? Well, it's because I'm not including today's data. Let's take a look here. I'm going to bring up the crosshairs and we'll line it up here. So again, today is the 6th. So there's the 5th. There's from yesterday. And you can see that if I go work my way up this line, there's 33, 34, 36, and then right about there we switch over to 7.6, which is today. So the ranges from yesterday were here from about 39 and change all the way down to, looks like down to maybe 30.29. So our number is right in the middle there. So evidently this platform actually takes several calculations throughout the day, and that's why it has a little range through here. That's what allows it to plot that line through the day. But our calculation is right on there. That's exactly how they're coming up with this line. So once again, how do we read it? Well, if we are in this upper zone here, if this black line is in this region up here on top, it is simply overbought. That does not mean you should expect it to be turning bearish or to be heading south. It actually might be short-term a sign of strength. Where we get our signal is if the line crosses from the high side down. That is a crossing signal. Now you can see we haven't really had any crosses in here, never quite got up into the overbought territory. Conversely, if the MFI line was down here below red or in the oversold levels, that doesn't necessarily mean it's about to turn bullish. It's just oversold. It's relatively low. It might foreshadow a turning, but you don't read that as though prices are about to turn. Instead, you'd like to see it move from below the red line to above, and once it crosses, that would be your signal. Just like with RSI, another way we can read this chart is with divergences. And what happens there, I don't really see any good examples on this chart, but let's say that we have a period of time where the stock makes a higher high, but the MFI indicator makes a lower high. Didn't quite keep up with it. That's a divergence. That would also be a bearish sign. Conversely, if we saw an area where the stock maybe through here made a lower low, but the indicator wasn't quite as low, we might see that as a turning point. But the main one that people use is to either A, look at this as an overbought, oversold indicator, or wait for this black line to cross from underneath, in which case it's now bullish, or to fall from above, in which case it's now bearish. Now just for kicks here, let's go ahead and overlay the two charts. I'm going to bring up RSI, and let's pull up RSI here and save that. Expand this back up. And the point that I want to show is you can see that the shape of both indicators is virtually identical. Not going to be exact, but they're going to be really, really close. And so the point is that if you're going to use these, I wouldn't use money flow to confirm RSI or vice versa because they're essentially the same thing. Between the two, I would go with money flow index because at least you're accounting for volume. Because think about it. If you have a ratio of 3, you've got 3 times as much money coming in as going out. Would you rather see that on a volume of 100 shares or on 1 million shares? The volume gives you an added piece of information, and that's being reflected in money flow index, but not in RSI. So now everybody has another technical indicator to go out and try out, the money flow index. So please give it a shot. Tell me what you think. Post some questions in the forum here, and we'll cover some other technical indicators later in the week. And if you'd like to learn more about the arts and science of options trading, please check out the Alpha Trader course at optionsatoz.com. Or if you're looking for a free site with lots of great information, please join us at the Facebook trading group Options A to Z. We'd love to have you join.